Good afternoon, everyone. It is 2 o'clock. Welcome to the weekly Wild Wednesday webinar. We have quite the show for you today. My name is Michael Crosby, filling in for Brad Yanane this week. And we have our Sultan of Sonar, Zacchaeus Strickland today. And Zach is just pining away. I was hoping to get maybe a market update in, but the market has been pretty flat lately, so that wouldn't take more than 20 seconds. But he's already got one of our new indexes pulled up on the screen and just can't wait to tell us about it. Zach, what do you think?
I can't. I'm actually really excited this week
about
this one. So we have added the USDA produce truckload spot rate into SONAR this week. I think anybody that's been involved in freight over the last several years would know what this kind of means, but just to add some color, the USDA actually collects these weekly kind of surveys, and they produce an average rate from certain areas of the country to certain areas of the country. So it's basically, you know, from the Salinas Valley to New York, for instance. And then we've mapped those to their specific markets in SONAR so that you can see the lanes. So I have the Fresno to Brooklyn market pulled up right here because it has lots of activity this time of year. Specifically, all our produce comes out of Mexico, southern Florida, the South America, but we still have a lot of production going on in California in the agricultural regions, Nogales, Yuma, Arizona. I think many people have heard about through all the E. coli reports from the romaine lettuce, but these are the areas that can have tremendous impact to the overall freight market, just because of the fact that a lot of the carriers will kind of abandon their contract rates to jump over and grab some of these solid paying agricultural loads. You can see that illustrated here. I kind of learned some stuff here as well.
Yeah.
I didn't realize that we had this kind of involvement. Now, a lot of this is going to have sensitivity to the overall freight market as well, which is probably why you see this kind of huge jump last January. Last January, I think, for anybody that's been involved in freight knows that was a little bit of a different January. Capacity was still pretty sporadic. Volume was relatively high, but not too high, but everybody was still kind of scrambling to cover and clean up from the previous couple of months of chaos.
Going into July, I mean, that's when our national van rate peaked as well of last year. So it's going to be a high time.
But this is more your traditional produce season right through here. And you can see it illustrated. 2017 is probably the one that kind of got the most people's attention just because of the fact that it was a little bit later than it had been in years past. It started in mid to late May. Typically, you see it kind of jump up in April. Early part of April, and the rate actually does climb a little bit, but they had a significant amount of rain in 2017, which delayed the produce season. And for those of you that aren't familiar, all of a sudden capacity just dried up across the country. And that's because they could get $7,900 for a load going from the Salinas Valley to New York City, as everybody was out of lettuce.
I was going to say, I was planning on taking the kids to Disney World this summer, but $10,000. Wow. Let me ask you, does that include fuel and other
Yes. So
stuff?
unlike some of our other indices, this one does include all the accessorials, team transit, all of that kind of stuff. Fuel is in there as well. So fuel is a component of this. Something to note, because these are flat rates reported to the USDA.
Primarily reefer, would you say?
Yeah, probably heavily weighted towards reefer and specialized trailer.
Okay.
So I love this number. I think most people you can see these giant spikes every year, or that have happened more repeatedly over the last 18 months or so. That's just kind of indicative of the overall agricultural kind of industry with its impact on trucking in general. So,
and we were discussing earlier that some of the lanes like Fresno to Brooklyn or Lakeland to Atlanta are going to have more data in them. So for some of our, I guess, has less volume in it. For some of the other lanes, It's
Yeah,
just when it's reported, basically.
exactly. Since this is survey data, and you're going to see lanes like this that have recently kind of started showing up. This Phoenix to Atlanta that I just pulled up here in combination. What this is basically they just started recognizing the market as one of significance as an origin.
Sure.
Or there's just simply not enough, volume in that market.
Right.
As the seasons kind of come and go, I mean, Nogales, Mexico, or Yuma, Arizona, does not produce lettuce all year long. They actually only produce it for a short period of time in the winter, due to kind of the regulations from California, where you cannot grow year-round lettuce in the same field. They have to rotate the crop out. So they give them a season off. They move all the lettuce production down to Yuma, Arizona, and that is where we get all of our romaine in the winter.
It sounds like you've written a couple of articles about that, Zach. You're very intelligent about it.
I have done a little research, but honestly, it did not take that much digging. There's been numerous situations where the romaine lettuce, especially over the last year, where I figured out just in tidbits where that was coming from.
So just like our rejection indices, if you're looking for outbound tender rejections from Green River, Wyoming to Bismarck, if it's not in there, that means that we don't have enough data basically to plot the lines.
Right. So the USDA will not collect data from places that aren't they're not heavily involved with agriculture.
Okay.
You can simply go in here and kind of put in ag rate and then start typing in the origin markets that you're comfortable with. So for instance, Nogales, Mexico is going to be in the Phoenix market. So anything with Phoenix, and then it's going to pull up a list. And it's more important to know the origins that you're interested in. Obviously, California, Phoenix, Arizona, the southern Texas, the McAllen and Laredo markets are going to have a lot more weight to them.
Florida.
Florida, Miami, Lakeland, they're all going to have a little bit more weight to them than the rest of the areas. But you do have places that, have corn, such as, let's see, what was it? I was looking at, there's Indiana, there's Cincinnati that actually, no, it wasn't Cincinnati. Well, anyway, it was out there in the Midwest. Maybe it was Des Moines. Nope, not Des Moines.
Who has corn?
Yeah.
Caller number 5. Caller number 5.
But apparently Baltimore has a decent amount of, agricultural freight.
It looks like a stable market.
Pretty stable market. Not a lot of spiking in Baltimore, but you get the point. A lot of it's going to sit out in California, where most of our kind of, anything out of Florida, Texas, Arizona, and California. California is going to have the biggest impact come the spring, as is indicated by this chart here. The Fresno, San Francisco, Ontario is going to have the Imperial Valley in it. So any of those markets right there are ones to really focus on if you're ever trying to figure out when's produce season starting. Is it starting to ramp up yet? Fresno to Brooklyn, not a bad one. And again, the destinations that are going to be the heaviest are going to be your bigger cities: Atlanta, Dallas, Chicago, New York. They think about the destinations as the population centers, because that's where most of the produce needs to go to feed the people.
Sure. Okay.
So anytime you're looking up one of these lanes, keep that in mind. Just think about it kind of commonsensically as you might consider the population needing food.
So speaking of commonsensically, or whatever you just said, let's say that our listeners couldn't remember that 23 character ticker. Zach, show them what category it's in and why you chose to put it there.
All right. So yes, that is actually a fantastic point, Michael Crosby. So I threw these in trucking supply and demand, and that is because we are getting a final rate from the end users that are essentially saying the rate's kind of the final indication of supply demand. So I'm trying to judge the market's supply demand capacity, all that kind of stuff in one number, and the rate is the one that kind of makes the most sense. If I'm trying to figure out since produce does impact capacity in the rest of the country, supply demand just seemed to make the most sense. I think most people will figure that out eventually, but I do understand that, tender rejection indexes and spot rates, not necessarily thought about in the same sense, but really they're kind of measuring the same thing in general, just in different ways.
Yeah, absolutely. Absolutely. Because we always know produce season is going to happen. We just don't know.
We don't know when. And that's where And the biggest problem with 2017 was the fact that it coincided with a lot of other stuff really kicking in. You had the summer push where all the replenishments and everything for the seasonal freight coming out, everybody building houses, the economy kicking, obviously had a big deal to do with that. But when all these things kind of came together,
critical mass.
Yeah, and that's when the market exploded.
Yep.
And it has been a very volatile market ever since. So I feel like this is a good category. Would you concur?
This might be a trick question that you weren't prepared for, but do you think any of our 7 futures lanes would correlate with any of this? If someone would want to perhaps hedge?
You know,
I know I threw you off there. He's kicking me into the table.
I mean, our biggest lane that's going to have anything to do with this is going to be the Los Angeles to Dallas lane, which for those, I got to put this on a dual axis because we are comparing 2 separate denominators, if you will.
Alrighty.
And come on up. There you go. So you do see a little bit of a correlation here with the overall market. Los Angeles to Dallas, that's going to be the one that's going to be the most heavily weighted with the Southern California, Central California agricultural industry.
Sure.
But yeah, you do definitely see that kind of correlation.
Almost looks like the rate is leading the produce. And it's interesting because 2017, where kind of the market was caught off guard, where the rates didn't really follow suit as much.
Yeah, no, the market was asleep right here. And this was kind of their wake-up call. This was kind of the moment that everybody was like, oh, shoot, what happened? And ever since, you can see how sensitive it is. And now it's almost like things have anticipated.
Right. Yes. Shippers are very aware for sure.
Yeah. But this has other things in it too, because you have to think one influences the other. So when the market in general goes up, this produce truck movement is going to move as well with it, not because the produce is jumping up, but because the market itself is moving up.
But it's a good point for, I know we're doing our futures road shows for the next few weeks, and so the guys are saying we don't have a Fresno to Brooklyn lane, but there are several lanes that we do have that are very correlated that, you know, you could hedge against a lane that is, even if it's similar.
Yeah, no, and you can see that the produce season does kind of lead the market in the spring. So
sure, like it reacts kind of like, it's here and now let's go up.
In the fall, it reacts to the market, but in the spring, the market produce leads the spot.
So drum roll.
Yeah.
Are you ready to go down the rabbit hole?
Let's do it.
We have another category in Sonar that we've just added, and I don't know if we start going down the rabbit hole, even the Sultan himself will be able to come back out. This is a very interesting index.
Yeah, we've added a whole slew of indices to the warehouse, what was formerly called the warehouse category, but now we've changed it to the warehouse and real estate category, just to kind of be better descriptive of what's involved in this category. I think everybody who's been in Sonar has seen the 4 or 5 indices up here: the warehouse rent asking, warehouse rent effective, price per square foot, vacancy rate, and the spread between the rent or the asking and effective rate. Those are things that are kind of intuitive. I think you kind of understand what those are in general. Somebody is asking $5 a square foot, but they're effectively getting $4.50 a square foot. The spread between that is 50 cents a square foot, et cetera. Vacancy rate means that there's going to be a lot more vacancies available in this market. People are exiting. Sure. Anyway, we've added a whole nother slew of things that basically enable you to kind of really judge the entire market. If you're a carrier, for instance, and you're thinking of opening a terminal in a market, you want to know how well is that market doing. So I'm going to go in here and I'm going to look at, let's just see, are the households, for instance, how many households in Atlanta, are they growing? They sure are. This market is still pretty strong. By comparison, let's pick one that has had some problems in the past. So let's go to Detroit. Detroit not growing as fast. And you kind of pull that out. And you can see even here in 2017, they went horizontal for a minute. Might not have been a great moment.
Do Chicago.
Wow,
because they say that so many people are moving out of Chicago every week. So this might, we found something.
It's you.
Dun dun dun.
Chicago is not booming like it
They even
was.
went horizontal there in
Yeah.
2017, maybe a little down.
Yeah,
Interesting.
but Chicago's a huge market, so they got enough people to kind of service there anyway.
Yeah.
So we compare that to, say, a Detroit.
Yeah.
Wow, surprising.
Yeah.
I'm actually a little surprised there.
Is that more than Atlanta? You
Oh, I have it on
Atlanta
a dual
too.
axis. Sorry. I got to put this on absolute to make it make real sense. So you see how
Ooh.
big Chicago is versus Detroit.
Yeah.
Like these are the type of households you're going to service. So if you're a carrier looking to kind of, you have a heavy retail presence, you're thinking about consumer markets, where do I need to position myself and get the best exposure? So I'm not, I'm trying to shorten my length of haul potentially on the final mile type deal, or even just I need to be closer to the markets with the highest amount of retail exposure, which is going to be households.
Right.
To kind of go back into the category itself, though,
Okay.
just to kind of roll down this list, absorption index, retail and warehouse. So you're going to see a lot of these indices split into retail and warehouse. Retail space is going to be storefronts, places where you're going to have customers actively walking in and out of. Warehouse space is going to be things like distribution centers, your fulfillment centers like Amazon has, that customers are not actively going in there. You're not presenting any kind of goods to the customer directly in the warehouse. That is going to be, the warehouse is going to be the thing that services the retail section.
Okay.
So warehouses, obviously for logistics management services, things like that are kind of trying to figure out where can I position this freight and service the most people, et cetera, for the lowest rate possible, that type of thing.
Okay.
Absorption index is probably the most complicated of the measures that we put in here. It's effectively trying to tell you as space is added in the market. So they're building warehouses, they're building retail spaces. How fast are those units being filled? So the higher the absorption index rate, that means that the market is very active. There are a lot of people putting inventory in these spaces. As it comes down, obviously the market is not able to absorb the available space as rapidly.
Okay.
So
it also shows transitions, right? So if someone's moving warehouses,
yes.
Is that the other aspect of it?
Yeah, that's another aspect of it. But the point of the index is essentially to figure out how fast is a market able to absorb the new space. And that is what this RE completions is. That's the new space. The real estate is what RE stands for.
Oh, okay. Okay.
So, you can pick out any market and see how fast are they building some of this space. So Atlanta, pretty choppy. They built up early 2018, kind of slowed down throughout the year, and then they built some more and they added some more. So they're completing warehouse space.
Okay.
This is the amount of warehouse space available in Atlanta that's new.
Okay.
See, coming out of 2015, they added a bunch, then it came down. So
it gives your potential shipper, or I guess if you're building a DC or if you're a carrier looking to build a terminal, it gives you kind of another way to look at it.
Yeah,
right?
yeah. No, you're gonna basically, you want to get a full picture of the market itself. If you're gonna open a space there, this is where we want to be, et cetera. Like this is part of the job. Like Starbucks,
right?
Chick-fil-A's, things like that. They do all of this kind of research before they decide to open in a market. Transportation companies have that to an extent, but they don't really do it to the level, or at least a lot of them don't do it, especially ones with terminals. They're kind of trying to find, well, who's got a speck of land sitting over here that's close enough to Atlanta that I don't have to be in Atlanta.
Yeah, usually not in the best neighborhood. That's where the cheaper real estate is, unfortunately. So,
but these are going to kind of give you an indicator overall of like how well is an area doing, economically speaking. And occupied stock is going to be part of that absorption index. That's going to be the bottom edge of it, but it's going to be how much of the warehouse space is occupied in the market. Total square feet of warehouse and retail. These are split up.
Gross revenue.
There we go. So RE inventory and retail and warehouse, they're both just the total square feet available of inventory in a market. Gross revenue, I think that's kind of self-explanatory. Vacant stock, the amount of available inventory that you're at the quarter end that you're going to have sitting in a market that you can go out and actively rent or lease.
Ah, okay.
Warehouse, same thing. And I think that, that pretty much sums it up. Really the kind of the odd pieces in here, like household and household income. Those are the ones that are sitting there trying to give you an active gauge of how the market health is doing in terms of people that live in it. These are real estate numbers.
Right.
They're trying to, you know, if you're going to operate in a market that the real estate market is super cold, maybe that's not the best idea if, say, you deal with Home Depots. They could be closing stores soon in that market.
Yeah, absolutely.
You don't want to make any long-term commitments on your leases, knowing that the market is actively dying.
Sure. And in your best British accent, these numbers are quarterly. Is that right, Zach?
Yes, the gross majority of them are quarterly.
All right.
And you can see that illustrated here in the descriptions. For anybody that has had, you know, any questions so far, you can easily see what these indexes are made up of.
Okay. So I like this. I mean, it completes the circle, just like our other indices for SONAR. When you're looking at volume, volume and rejections, a lot of people assume, oh, rejections are going up, the volume's going up. Well, not necessarily. It just gives you like one piece of the puzzle. You have to look at rejections. You also have to look at the weather. You have to look at, there's many reasons why a carrier, for instance, wouldn't want to go into a particular area, not just volume.
And this is one of those indices that's kind of, it's not that daily tactical stuff. Obviously, anything that's represented quarterly is not like your daily, I need to go in and look at the warehouse retail absorption index every day type deal. This is more for your, it's there if you have an interest in kind of getting a judge of the market itself. It's going to help you. You know, it's also just additional information if you are in that kind of space of analyzing the market itself.
Right.
It's going to help you get a better idea of what's going on in individual spaces across the country.
Sure.
Knowing Atlanta is dying or Chicago is not growing as fast as it was actually does have some significant benefit, you know, in a long run planning situation.
Yeah. I mean, you know, you think Chicago is one of the biggest cities, but to think, well, there's times when it's not actually growing. You know? So
no. And I don't know. I mean, absorption indexes are kind of complicated to wrap your head around. And I don't think anybody's going to need you to do it on a daily basis, but the people that are interested in real estate in that kind of space, certainly they now have that option. So to pull it back a little bit, I know you
pull it back.
I think we can go back into a little bit of a market analysis for the week.
I knew it.
just because things are flat, Crosby, doesn't mean that you don't have something to talk about.
Well, it's boring for the analysts, but shippers are sure excited about it, though.
Yeah, but I think it actually is kind of interesting. The fact that it has kind of, you see this kind of turn up in the outbound tender rejection index here. We were falling rapidly. The rate of change slowed significantly over the last couple of weeks, where it kind of started dipping again towards the end of January, but now it's starting to kind of, it looks like it's almost bounced a little bit. Now, it doesn't mean that it won't go back down again, but we're getting low enough to where there's not a lot of room.
Yeah.
Not a lot of room.
Can't go past zero.
And we're starting to move into a period of time where people are going to start anticipating spring volumes coming in. March is just around the corner. February is the shortest month of the year. I don't know if you knew that. But it won't be, it won't be long till it's March. We've already had some 70-degree days down here in the South. So that means people are going to be outside, starting to think about grilling and doing things outdoors, housing, construction, that kind of stuff. Tends to pick up in the spring into the summer in the South.
Mosquitoes. We need a mosquito index on here too.
Right.
I was looking at some of the markets that we have. We do have data available for, like the LAs and the Atlantas and Chicagos. It looks like we do kind of hit a little bit of a plateau, and then towards the end, I guess maybe the second or third week of this month, really starts to kind of go up again into the spring. So that is probably going to affect our outbound tender rejection index.
Yeah, if we pull it back out, I mean, I think you can see that things remained relatively calm last year. I mean, it wasn't calm, but for that period of time, tender rejections did kind of come down a little bit into the end of March. And then in the middle of March, things really pick up. And we have a big March, everything kind of comes online, et cetera. Obviously, 2018 will not be the exact same as 2019, but as a seasonal pattern, it's not unusual or a stretch to think that March should have some sort of seasonal push. To me, it's been more of like which of the 3 months are going to have the biggest impact. March kind of wakes everybody up. April tends to be hit or miss, whether or not it continues that momentum. And May, typically towards the end, you see this kind of huge push towards the summer as the market kind of destabilizes.
And that's kind of on the heels of the produce season as well.
Yeah,
right?
Produce season has a huge impact here. But last year we had this intermodal component. And just to kind of check in on intermodal, this is actually one of the rail traffic indices that we have in SONAR. I'm going to pull out all the way to a year and just to kind of give you an indication. So this intermodal piece has been gradually increasing, especially throughout the year. We're at the lowest level that we've been since April of last year, and it's starting, you can almost see it having crested. And this was kind of the big story of 2018. We just started Chinese New Year today. So
yes, you're right.
Chinese New Year is a big deal with it, and that's intermodal and Chinese New, and imports from China obviously have a huge relationship. But intermodal containers have kind of fallen off from the rail over the last couple of weeks. That's a huge point because that's kind of been the big story of the end of 2018.
Right.
To check on the FBX, which
I didn't know if we have an update on that yet. I know
we do. You see, it's kind of coming down. It's smooth, which is, that's to me, seeing as those ships should have started leaving now, and you have this big cresting peak. The cresting peak was far less than November.
Oh yeah.
You know, and it happened on January 20th, or the week, the middle of January, and we didn't see it peak right before Chinese New Year happened. So that means that we shouldn't expect to see a lot of volume coming in and hitting LA like we did last year.
How are the tender rejections out in that market?
Los Angeles,
the west. Yeah, Los Angeles, Ontario.
They're very low. The thing about OTRI LAX, it's extremely low right now, but there is a component of the tender rejections because we figured out that a lot of the a lot of that is just warehouse repositioning. So LA was basically full of containers. The short haul moves, which are those from about 101 to 250 miles away. It's a lot of, repositioning of these containers and the freight that has come into the Los Angeles market. They transload it, put it on a container, dray it, something, and just to kind of get it into an area where they can, they have space. So right now they're still pretty full. So the short haul, you see, as compared to the rest of the market, which is at a 2.44 rejection index. So that means that capacity is fine in LA, even though volume is significant.
No, that's a good point. Would that get you to Phoenix, or obviously it would get you to Ontario? I know.
Get you to Las Vegas.
Stockton had a lot. I don't know if you could get that far on a short haul.
Stockton's a little further away, but yeah, it's kind of like as they're positioning an Ontario market, the Imperial Valley, that kind of area. San Diego, for instance, San Diego's had significant increase in warehousing costs over the last 6-7 months. Just due to the fact that there's no more space. But of course, San Diego is an expensive area
definitely
to be in anyway.
Wow.
But I think we've probably, we're at the tail end of this cycle of imports and the tariffs. I don't think that's going to be a continuing factor moving into the early part of 2019. It'll be something else entirely.
It will be something.
Yeah.
Wow. We'll have to keep a close eye on that one as well.
Yeah. So let's
see if we have any questions.
I'm going to say we are bumping up on time for the week. So
we are bumping up on time. We'll hold off for just a couple of minutes and see if you guys have any questions. We'll stand by for just a minute, okay? All right, so we do have a question. It's about our tender rejections up in the Northwest, I believe. What happened up there? I know we saw this morning we saw the Twin Falls and the Pendleton markets take kind of a dive here. And this is interesting. I was actually talking to Zach about this earlier. We saw this. Now, this region, Zach, is made up of Washington, Oregon, and Idaho. Is that correct?
Yes, it's so the Northwest is probably the smallest in terms of state representation,
Right.
and geography, just
Right.
because it's kind of shut off there with the mountains.
Right. So obviously, with with the less states, there's more that can affect the average. I don't know if you can throw up the maybe the Pendleton or the Twin Falls. I think those were the two markets that were affected.
Yep.
Yeah, definitely.
Pendleton dropped off quite a bit. Let's see, Seattle. So the Pendleton and Twin Falls areas are heavy agriculture, and they're going to have a lot of potatoes and all sorts of stuff going on. Their harvest seasons are about, I think they pretty much ended a few weeks ago.
Right.
There's a few that last throughout January up there, but there's a big snowstorm up there. It's been very cold
Right.
up there. So my theory is that we've had a lot of weather that has pretty much shortened the harvest, even though it was at its tail end anyway. Once that happens, the Northwest is done until summer,
Right.
effectively late summer.
So essentially, all the trucks flocking to this area to get loads of this agriculture.
Yeah, the Northwest itself, I think most people know, has one season.
Right. The trees.
And you see it kind of ramps up, and then the trees, and this is more. Most of their harvests start in August. You have blueberries, cherries, all this kind of stuff. With all the tariff concerns, like we weren't able to ship a lot of that stuff out into China. A lot of it had to come back into the United States. So it increased some tender rejection rates coming into the fall. All these harvests happening, and then Christmas trees, etc. Peaking around this time of year, and now we're coming back down. I mean, it's just that time of year where we just, February is not the Northwest time of year.
Right. So. And it is kind of drastic, but it's significant. If you look at kind of the overall trend, like right there, somewhere around the first week in April, I believe that spanned like 2 days, but it looked like it dropped. So it's typically more volatile because, the smaller sample size of states and just the nature of the market.
Yeah, the market itself has its own fingerprint. So it's definitely a little bit more volatile due to what the unique kind of commodities are up there as well.
Right. So when it's done, it's done. There's not like,
Yeah. And once everybody kind of figure, LA also sucked a lot of the capacity away from this area over the fall, dealing with all the inbound containers. Everybody went down to LA.
Yes. Everybody went to LA. Right.
So, yeah.
Okay. All right. Well, good question. Thank you. Let's see if we have any more. I think that's all we have.
We're good this week.
Thanks, guys, for joining us today. Be sure to check us out on FreightWaves.com and let us know if you have any questions about today's episode. We'll be back with you next Wednesday. Thanks, everybody.